Hello, everyone. Let's talk about the week of the moving averages. So basically, I use this one as an entry point. If I am in a outside of a range, basically what I'm trying to do. That remember that I try to be a um, a trend trade trader. So which means that what I'm doing here is to just follow the trend, right? So again, permission is if to enter a trade if you're bullish, if this stack Renko that I have here is to the upside, going up. So that means that the moving averages are all lined up to the upside, except for this smooth 50, which is probably also it's important, but I don't see it like a stack, or I don't have it in the stack Renko indicator up here. So basically, what I do um, is to pay attention to this moving averages, and then this one here, which is the 50 SMA. So let's eliminate a couple of indicators here to get it not to get it basically more cleanup on this chart. So I'm gonna go here to this indicator setup, and then I'm gonna review each one of them for this one and let you know which ones I'm going to. So the cross builder is the moving average is a moving average indicator. So this one would be fine. The Ichimoku cloud, I'm gonna make it not visible. There's another video for the Ichimoku cloud that you can see. I'm gonna put it up here, and then you can see the link is going to be right in this area. Um, then the Unirenko, that is this value right here that gives me um, the Unirenko price basically. So which gives me, if I let's do this. Mm. So that price right there, the one you see here. Let me see if I can plot it. Unfortunately, I had to reset and actually build a new computer. The other one was giving me some problems, so I built another one, and this is that not all the setups are really in this computer yet. So you have to have some patience today. So I'm gonna go with yellow here, and then so what I'm talking about is this indicator here, which gives me this and this price. So high for the close of this bar or this brick to the close of this one. If it so the close of this one and the reversal of this one. Okay, so that is that indicator. Let's go back here. So I'm gonna. It doesn't matter. I'm gonna leave this one here. The open range indicator here is for the ES, and also I use the same one for NQ. Okay, because it market opens at 30 minutes, and then I consider this one 10:34. In for GC, I use 8:20, and then I do 8:40 or 8:50. So 20 minutes or half an hour for the end time. And then CL open at 9, and again 9:20 or 9:30. It's up to you. But that would be the where the ghost pit opens, and then I use 20 minutes or 30 minutes. Okay, so I'm gonna make it not visible here, and then MQ momentum. This one is you can there's a video that I created also where you can set this one up with the MACD. So very similar. No need to get the MQ momentum. I did it just because it gives me good levels and consistent into the different instruments I trade. So the my if the price is within the 25 and 25, or the indicator is within 25 and 25, then I can take I'm authorized to take the trade. And even if it's in between 10 and 10, or plus 10 and minus 10, that would mean that the indicator or the price is resetting. So, for example, in this site here, I take this one. I'm gonna make another video about momentum that probably is gonna be helpful for you on how to use momentum in combination with the price action. Now, swing rates, I don't need them now for the explanation, so I'm gonna disable them. The pivots, okay, I'm gonna delete them as well. So okay, then Ninja price action. This gives me the higher highs, higher lows, and all of that. I'm gonna disable it as well. And then drawing tool, I'm gonna leave this one there. This one puts a drawing tool right here, so I can easily access it without any shortcuts. And then trend lines. This one gives me the last trend line here. I'm not gonna use it now. And then simple moving average. The zigzag is also closed, and the VWAP. Okay, I had a question. I received a question in my in the Discord chart, or in one of the comments in the video, asking me for the VWAP, why I didn't use it. I do use it. Not all the time. I have it in my charts, but is this one here? And the setup is this. So I use two number of deviations, and then deviation 2, I set it up at 201. So that is the setup. You can copy this one. I'm gonna scroll down so you know exactly what I did. And then for the color, the VWAP is at that one there, dotted line, silver. And then for the deviation themselves, I use yellow, which is this one here, and then this one here. Okay, 2 standard deviations right there. Okay, so this is what I use on the standard deviation. I'm not gonna have it activated now because it's a different indicator. And then the zigzag, I do have the zigzag. Sometimes I activate it. Most of the time I don't. But this is the deviation value I have at 14 points. Anyways, so this is the indicators I have. But so you see here that what we are looking for in the week the week of the moving averages are bounces off of the moving averages. So what we want to see is the price going in one direction, or going, let's take this area here. So I'm looking for weeks that are in my direction with momentum going in my direction, right? So basically, let's identify some of the weeks. So you go here, there's a move to this is Friday's action or price action. So you have clearly in here, you do have a price moving in one direction, so you're bullish. you will see that one there until in the morning in the 30-minute chart also went from here to there. So it's it didn't mark it there. So, but anyways, but it goes from down here to the upside, and this one is a nice move to the upside right there. Probably came from the very morning right here all the way up. So we are in the moving average. It's a little bit choppy. I tell you the truth. I for Friday on ES, I took only one trade, and it was for one target only. So I made $200 on this one, and then I took another one for another 100. So it's 250 plus 100, so $350 what I made there. Anyways, and I closed that one before because I didn't trust the price action on this one. So basically, what you do have is price moving to the upside, and I'm bearish in this instrument. So ES, I'm bearish. So in the long term. So let me show you. Okay, I'm not gonna do that. I was going to start talking about the market, but the intention of this video is different. So basically, you go here in the morning, you get bounces off of the moving averages right here. You have one there. You are in the range though, so the setup is there, but the overall context or the bias is not there. So moving to the upper side or moving bullish in a market that is bearish is kind of risky as well. So let me expand this a little bit. So it started to move high and then came back, reached a new high, and then came back down. And if you see here, there is a choppy area in this area here. So let me mark it as also. So this is part of the analysis. Oh, okay. This one here is. So you have a choppy area, and then this price here, this price here was kind of in the middle of it. So, going bullish there, and you have these moving averages and this moving average and the price in between them. So this is kind of risky area to trade. You want to see, a defined color in the stacked EM. So it's going to be either green or red. In this case, is red when you have all the moving averages stacked to the downside right there. Okay, so anyways, in at this moment you get bearish on the price market, and here you have consolidation basically in this area right here. So I'm gonna mark it again. So here you have consolidation basically because the price is in between the moving averages, and then in this area here you're bearish. You have the stack EM, meaning that all the moving averages are to the downside. Okay, so now we are coming here, made a reversal, or not a setup reversal, but it reversed, and the moving averages are stacking to the downside, and then you have one 1 week out of the 18 moving average. So again, I'm going to open this indicator here. You have 18 and you have 34. Okay, so this red area means that you are bearish. And then here you have 1, 2, 3, 4, almost 5 ticks. It didn't reach the $200. It reversed, so probably a small loss right there if you took this trade. Then the market came back up and then made a week out of the 50 SMA right there. Okay, so this one here, it's not really clean, but the moving averages are kind of stacked and they are together. So, and then the market in the high in the higher time frame in the 30 minutes, it's below it's kind of forming this area here, but you have already the moving average is stuck to the downside, with the exception of the 50. The 50 here is not really yet, or all the moving averages are not really yet below the SMA, right? So um, so the SMA is not higher than these moving averages yet. Okay, but it is in transition, so it is actually a good reversal. You have 1 week out of the 50 right there, so this one is a valid entry. Again, you have to look at the context, okay? And we are in an area that is very choppy during the day, so here it's kind of like risky to take. So what you have to think now is, if you want to trade in between this area low and this area high right there, okay? So that is a decision you have to make, and then consider also the other um, indicators like the opening range, etc. So, but you have a valid entry right there. Short lived, and then you have another week out of the um, moving average here. In this area, you are actually in congestion already. So you have, or consolidation, you have this level here. Let's put it this way instead. So you have a pivot high right here and a pivot low right there, and then price is moving kind of sideways in there, and then breaking right there. So this one was a good entry. It's a different setup though. But then you have this one here coming back down, 18 EMA. The market is not trending. So when it's not trending, it's better if you consider weeks out of the 34 and the 50. SMA 50 and EMA 34. So then you have another 50 right there, and then you have another 50 right there. This one is a 34. It didn't follow, so right there. And then you have a weak, kind of, it didn't touch it, but it's close enough. And especially because you have an up down pattern here. So you have up, going down, up, down. So that is how I call up, down, and then it broke in this click to the downside. In the bias is to the downside, even in the 30 minutes. In the direction of the move of the price here is going to the downside. So you have a valid entry and against the smooth 50 trend. And this one was a good for one target. And if you're taking two trades or two contracts, then the other one is also good. So this one is 1, 2, 3, 4, 5, 6. That is where your first $200 is. And then if you go back, then you have another 200, not 200, 250. This one is, yes, $250. So you probably have 430 to 400 to $500, 460 to $500. Anyways, so the setup is that one there. So week out of that moving average. There's another week of the moving average there, 318 though, and it's actually a little bit extended already to the downside, but it's below this pivot right here. So, and that is the other one, the other thing on this trade here. And which is, I think, that where I took one of these trades. Let's see. I'm going to activate the toggle trades. Oh, it was actually right here. Anyways, so this one is a week out of this one was a short, very, very small scalp that I did for $100 right there. Anyways, then the market started to close to move inside the 15 minutes before the market opened, and I don't trade right there. But you do have a week out of the smooth 50, and then there's another week. This one is probably don't classify as a week out of the moving average because it went a little bit farther, but it's a valid entry. It's still within this one. A week out of the um, 18 right there, another week out of the 18, and then choppiness, and then the market close. So basically, that is what you have to start recognizing, right? And this is always a hesitation either to take. I try not to take breakouts because normally they fail. If you are taking this one and then goes inside there, fails, and this one failed, went up and down and failed. So when you have a horizontal market, then and it's not trending like in this case, um, like in this case, um, you have to be careful and probably sit in your hands and not to trade. But if you want to trade, if you want to take the risk, that is one of the setups. So with that, I covered already the 4 setups I have. If you can go to the Discord channel or the Discord server, and I have 4 of the setups that I trade. So S1, S2, S3, and this one is S4, which is the week out of the moving average. Thank you so much for watching.